Welcome back, everybody, to Volatility Trading Strategies. So this Barclays mess with them suspending share creations and basically breaking the VXX, it is still an ongoing saga. They haven't fixed it yet, unfortunately. And none of us know when that is actually going to happen. It could be a couple of days, could be several weeks. But I wanted to share with you a trade that I have taken live. It's a short volatility trade. It's just a way for me to get a little bit of skin in the game, have a little bit of fun trading the VXX, but not take on too much risk because, of course, this is a very unknown event and there's no way they're going to telegraph it ahead of time when they're finally going to fix this thing. So we do have to be careful. But on the other hand, it is a rare event and we do kind of want to have some fun with this thing. So here's the trade that I took. You can take parts of it. You could take the whole thing if you wanted. Obviously, full disclosure, this is not trade advice. This is just me sharing something that I personally did, and you might be able to learn a little bit from it. As always, if you enjoy my work, make sure you do hit that like button for me. It really does help out. Subscribe to the channel, hit that bell icon, all of that good stuff, and let's get into a short VXX trade for this Barclays disaster. So this is the trade that I am going to do. Now, let me just walk you through why I feel that this is probably the one. This is the one that I think is the safest, the one that's going to make a decent amount of change and probably not get too out of control. So if we go to, say, 30 days out, remember, duration is our friend. We need this trade to have an expiration date longer than the expected announcement. Now, I don't know if it's a day or a week or a month, but 30 days, given that this is a limited loss trade, I think 30 days is enough. I really think they're going to fix this within 30 days. If they don't, then this trade could be in trouble. Unless, of course, the VXX decays on its own, but it could be in trouble if that's the case. So what we're looking at is we just need to open a long vertical. We'll choose the strikes later. So we could do something like this. And this is what the long put vertical option looks like. It is a long 23 strike right now, and it is a short, let's call it a 22 strike. Now, as far as strike selection goes, where do we want to set this trade? Because remember, the advantage that we have here is that we kind of know that there is about 350 in juice here. So what we could do, if you just prefer to use Yahoo Finance, we actually could just set the strike price at the current VXX indicative value, so about $22. That's what it should be trading at. We could just say that that's the baseline case. It is going to gap down to $22, and that's going to be the end of it. And you're going to leave this trade on. You can see you're risking 45 to make 55. That could be a fine trade. You're making a little bit more than you get, but remember, the price here is going to gap down at some point. So that's what we're counting on, is that the indicative value of where this thing should be trading today is actually here. So you're going to get a really nice bump when that announcement comes in. But the second aspect that you could factor in if you wanted, and you don't have to do this because this is a trade on top of a trade, so to speak. The first variable is the Barclays mess, is the indicative values and setting those strikes and timing the announcement. That's the first aspect of this trade. Most trades just have the trade. This one has that extra stuff. But let's not forget that the VXX is the VXX, and we're talking about a trade that is 30 days expiring. If you want, and adding additional layer, you can start trying to factor in the actual decay factor of the VXX and set your strikes even more accurately if you'd like. So the one thing that I'm gonna go over really quickly, this is a super simple way that you could do it. I do it a little bit more detailed, but this is a general audience. So within our VTS community, I have a lot of volatility metrics in our dashboard. They're all useful for different things, right? So this may not mean much to you, but all of these metrics are used for me in all of my different strategies. So we've got 4 at VTS, we've got 10 at VTS Options, and they're all useful to me. The one that's called VXX Crush Level is essentially factoring in the current volatility environment and all the metrics and showing how much the VXX is going to decay, all else being equal, in one day, given all of these metrics and where the market is currently trading, with the VIX futures and the term structure and all of that. 0.35% down per day. So it is decaying. We do have positive roll yield. You can see that here. We got the VX30, the VIX roll yield. It is positive, about half, 50th percentile. And the decay factor is in about the 50th percentile as well. So down 0.35. So what you could do, If you wanted to sort of mimic something that I'm doing really quick for yourself, remember the VXX decays about, on average, minus 2.38% per day. But that's including all the spikes and all the down periods. So in this case, I would actually favor my VXX crush level metric at minus 0.35. We're actually decaying a little bit faster than the long-term average right now. So what you could essentially do is just type in the current NAV value of the VXX, which is 2543. So I'm going to type in that. 2543, and then I'm going to add minus 0.35. That is the decay factor. And sorry about this spreadsheet. This is going to be super annoying for you guys. This spreadsheet is basically broken. So it beach balls all the time. I just haven't had time to transfer it over. So give me a second here. When it snaps back in, we will adjust those prices. We will forget the fact that there is circular references all over this spreadsheet. This thing goes back many, many years, and it's basically done for. So I have to transfer all this over. There we go. So 30 calendar days, in this case, is actually 21 trading days. So the NAV, sorry, what I should do, I messed that up. I should be doing the indicative value. That's what I meant to do. I think it said 2197, didn't it? 2183. Sorry, you're gonna have to watch this stupid spreadsheet do this beach ball again. It's actually not a Mac problem. It's just my life as a person who has enormous spreadsheets. So 21 days later, we're actually expecting it to be down at 2028. So again, you don't have to do this if you have basically a no opinion on the VXX going forward. You could just use that 22 strike or 21 strike, but technically speaking, probably going to be about 21 or 20 if the VXX decays at its normal rate. So now you're looking at a trade like this, 2120. This amount right there is the IV. It is the actual NAV. This amount is what we're essentially factoring in. Over the next 21 days, the VXX will probably decay a little bit on its own anyway, even if Barclays didn't do all this mess. So this is actually where we're expecting the price to be. And this is a quant style trade. If you have a different opinion, that's fine. I don't tend to overlay my personal opinions on top of my trades. I tend to do things by the numbers, but this is sort of a trade that would look good. And then the one thing that I like to do, I don't like to trade $1 strike gaps. So sometimes I'll just bump it up to $2 strike gap, and essentially this is the trade. So it'd be risking $61. Hopefully it decays a lot. Hopefully Barclays announces and fixes this thing and we get a big gap down, and there you go. This trade could potentially sort of break even here, and then if we get additional decay, it would go a little bit further. So right now, the VIX futures are in contango, but not strongly. So this is why I'm saying over the next 21 days, dead even on that strike is about 2050. This is the mathematical expected place that the VXX will be 21 trading days from now. If you want to see how it's executed, another thing that I typically do, and you don't have to do this, but for me, typically for options trading, as far as scaling, I typically go about 1% of net liquidation value. So I will take 1% of my entire net worth. That's what I mean by net liquidation. All my investable capital, I will take 1% of that amount and I will allocate it to a trade. Some trades, if they're very slow moving iron condors or something, they can be higher than that. But that is sort of a standard, not risk trade, but a trade that I'm basically willing to let this sit there and die. Because I have to keep this thing open until the announcement. There's no reason to monitor this in a normal trade. If I don't get the gap down, I am way outside the money, and it would take a near miracle for the VXX to move that much. I need that gap down. So this trade is probably going to bleed capital on me. It's going to just go down and down and down and down, and it's going to look really ugly. And then one day I'm just going to wake up and I'm going to see that, oh, wow, Barclays fixed this. Maybe it's 2 weeks from now. And it's just going to gap down and it's going to fix my trade. It's going to look bad for a while and then it'll get fixed. And if it doesn't, all the money's gone. So that's why I have to keep this at a very reasonable level. And I always feel like 1% is a pretty good range. So just full disclosure for everybody, I will do 1% of my entire account. This is just a live trading for our chats, like for our live streams. I will also I want to let everybody know, just so you think, if you're going to take the trade and mirror me, you probably want to know that I did take the trade. So I will go to Interactive Brokers as well, and I will take the trade with my portfolio. This is live capital, but I'll be taking more contracts than that. I just want everybody, because a lot of you know that I have two accounts, and I don't want people screaming in the chat like, oh, you only took it in one of the accounts. I will go back later. But let's try to scale this. So all you really have to do is just risk $2,650. So, I mean, what would that be? I don't know. Let's just start guessing here. 30. Let's go to 2,442. That's close enough. 42 contracts of that trade of the 2119. Let's see how close we can get. Now, the VXX is bouncing around. It's moving quite a bit. I don't know how executions are going to be. This is going to be interesting. I've actually never traded during one of these things either. So this is a learning experience for all of us right now. But I'm going to open a vertical. I'm going to adjust the strikes to 2119 like we said. And I'm going to adjust the contracts to 42. So that is 1% net liquidation of this account. 62 is the mid, 74 is the natural. So I always tried it for the mid, right? ThinkorSwim's very good. So the listed price is good. Interactive brokers, not so great. So sometimes you want to sort of like bump it up a little bit and try to do a little better. Or sorry, go the other way. Just to see. I'm not going to get it because ThinkorSwim's very good. I'm just using this as an example, just to show you how fast it is to price these things. So we're going to fire it off and we're going to see it's not going to go through, right? I went down the other way. I have to actually pay more because this is a debit spread. So what you just do is basically, I would wait 30 seconds and then I would adjust the price, but it's a live stream, so I'm not going to wait that long. I'm going to go up 2 and see if we get that. And we did. Like I said, I would have probably, if I cared about the pricing that much, I would have gone to 61 cents, waited 30 seconds, gone to 62 cents, waited 30 seconds. But we got it at 62, which was the mid. Like I said, ThinkorSwim, the price that they show, it's actually quite accurate. I know a lot of people say, well, their software isn't. Schwab, Fidelity, I don't know. Tastyworks, whatever you use. But the trade went through, and now I have 42 contracts of this thing expiring in 30 days. I'm hoping it gets to $18.99, like 19 bucks. We're right here. It's going to gap down to here, and it's going to really help my trade out. And then hopefully in 21 days, my natural decay factor of the VXX is going to kick in at 35.35% per day. And boom, I'm going to nail this trade exactly. So that is, in a nutshell, how I would take a trade. Those are the things that I consider when I am trading. I would do more. There's more calculations I could have done, but just to give you an idea, I typically don't just say, I feel this, I'm just gonna, boom, there's the trade. There's some thought that goes into it, some calculations, a lot of spreadsheeting, a lot of metrics, like I'm bringing all of my volatility dashboard metrics into the equation. If I did do the iron condor, for example, I probably would have brought one of the other metrics in. I probably would have brought the VIX minus volley residual in. And I would have decided if this number is very high like it is now, that means the out of the money activity is pretty high right now. You can decide whether a straddle or an iron condor is the better trade. There are other trades I could have done. If I'm doing a butterfly, I probably would have wanted to know how much the trader's VRP is elevated. Essentially, once you have your own little volatility dashboard going and you understand all of this sort of vol complex as a whole, you can start to price your trades quite accurately. And now, luck of the draw. Let it go. It's out of my control now. Thank you so much for watching the video. So don't forget to subscribe to the channel and go check out my website right here. There's tons of articles and videos on there, as well as a free trial to join the VTS investing community. What have you got to lose? Come see how I personally navigate these unruly markets. See you next time. It's almost 2 in the morning for me here, so I don't know how